Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 22nd day of April, 2019, and this is the daily report for gold and silver. We do have a mixed bag in the precious metals markets, with gold and silver trading fractionally higher on the day, platinum trading fractionally lower, and palladium trading dramatically lower. That all in light of dollar weakness, providing some tailwinds for all of the precious metals across the board. Although we are looking at a post-holiday period, we still have light volume and very little action in the markets today. Let's take a look at our current pricing. Gold, basis most active June's futures contract, has closed up approximately 80 cents on the day and is currently trading at $12.7680. That's a net change of only 0.06%. Silver is about 0.1% higher, with a gain of about 1.5 cents, and currently just under $15 at $14.97. Platinum trading off by about 70 cents on the day at $9.03, and it's palladium that's taken the largest price decline today, down 1.77%. That amounts to $24.80, and futures are currently fixed at $1,373.70. We have noticed the indications that we could be looking at a bottom forming in gold, and we'll take a look at that as we pull up our technical studies. Traders, although the market did close up 80 cents on the day, when we look at our daily candlestick, we can see that it is a rather small-bodied but red candle. All that means is that the market opened and then closed below its opening price. That's how we get the red candle. And as you can also see, it closed slightly above the closing price of Friday. And Friday really was a doji. And a doji is simply a point in time in which the open and close are either identical or a tick or two apart. It's about a tick, as in the case of Friday. But what we can see when we take a look at this market is that since the dramatic sell-off that occurred on Thursday of last week, and traders, that is this candle right here, we have seen lower lows, but we have had a close that has been above what we are considering to be the key and critical area in the market, which is the 0.38% retracement for the long data set and the 0.50% retracement for a shorter data set. We will need to go ahead and compress this chart, which I will do. When we will do that, you'll see that what we're looking at currently is a chart with the shorter of the two data sets. This data set begins in November of last year. It occurs roughly at just under $1,200, and it goes up to the top of the price range this year, which has been $1,350. The longer data set starts at the end of 2016 at about $1,124 and goes up to $1,370. The insurmountable, or insurpassable, I should say, high that gold pricing has not been able to move above. But nonetheless, when we look at recent price activity, we can easily see that it is attempting to form some sort of a bottom. In fact, when I look at this market, it is a very, very similar look in terms of trading activity that we saw back at the beginning of March. This is when the market had just fallen from the high of the year at $13.50 and then traded dramatically lower to about $12.80 per ounce. And when we look at this particular price area, what we see is that it was also characterized by candles that were red, meaning that they simply closed below their open and contained similar lows, and had very, very small or compressed ranges between the open and closing price. That is indicative of a marketplace that is attempting to find some sort of support, or in fact, you'll also see that when we go to resistance areas. We can see that support right here, although we had extended ranges, meaning exaggerated highs and lows. You can see that here the bodies are rather tight and are indicative of a bottom being formed, and that, of course, occurred at the beginning of April. It is for that reason that my recommendation is to maintain our neutral stance. I do believe that we do have a very, very high potential that we are forming a bottom here. However, on a technical basis, currently, we do not have any evidence of the fact, and we really need to see it not only hold this particular price point, but more importantly, bounce off of it with a nice green candle, and the larger the size, the better. Currently, I'm looking at resistance at about $12.91, and that is based on two factors, the 0.38% retracement level, and this, of course, again, is that smaller data set, and that correlates almost exactly with the current 200-day moving average. That's at 1291.20, and this is at 1291.90, so within 60 cents of each other. And traders, although we had quiet action in gold, silver, and platinum, the same cannot be said for palladium. Palladium experiencing a decline of about $25 on the day, almost or a little bit over 1 3/4%. And when we look at our candlestick chart, the daily candlestick chart, we can easily identify a very simple 2-day pattern that is simply known as an engulfing bearish. An engulfing bearish is defined first after an uptrend, and there's been a slight uptrend. When you take a look at it coming off of these lows, you have a market scenario where you've got a green candle, and then on the following trading day, it opens above the price that it opened at before, and then closes below its opening price of the prior day and completely engulfs the body of the prior day. It doesn't have to engulf the wicks or the highs and the lows, but it does have to fully engulf the body of the prior day. We are certainly getting that. This would be a valid signal if we had a continuation tomorrow with a red candle, with a lower low, and a lower high. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.